Okay, good morning, everyone. Thank you very much for joining us today. So hopefully you can hear us okay. We've still got quite a few people joining, but we're going to push on for a prompt 11 o'clock start. So yeah, we'll get pushing on now. So yeah, no, a huge good morning to everyone. Thank you very much for joining us on today's webinar. Hopefully you can hear me fine and see me okay. So today we're going to be covering reinstatement costs as the insurance experts webinar. So we're aiming for the session to be about 45 minutes today. We may go over slightly depending on the questions, but I'll cover that as we approach the time anyway. So just a quick introduction. So we do have attendees from different parts of the industry with us today, hopefully with a common interest in insurance and reinstatement valuations in particular. So we've got a real mix across the industry of brokers, loss adjusters, surveyors, underwriters, and risk managers, amongst a few others. So we do try to keep the content quite broad to make sure it's covering everyone. But obviously the questions are there for your availability, which I'll cover in a moment. So just a bit of context, really. I think while it's a heavy regulated industry where duty of care towards customers is paramount, we know that there are challenges around the use of reinstatement valuations and rebuild costs, so some of which are all out of control. Now, as BCIS, we've seen a number of complaints reported to the Financial Ombudsman Services in relation to building insurance and cases of underinsurance and incorrect valuations consistently increase over the last few years. We also know at the backdrop of this particular area of work, there have been some seriously volatile economy in the recent years, which I'm sure the panel will be touching on shortly. Which it's affected material costs significantly, as well as other resources, so such as materials and plant. All of this is kind of combined to make quite a problem in the industry for us. So it's no wonder we're coming across so many examples of underinsurance. So also, I think it's fair to say, whilst it's a fast-paced industry, it's one that retains a lot of manual processes. So lots of spreadsheets on data, PDFs, and we've seen various different methodologies. So what we've been really pleased to see so far with the questions we've had leading up to this has been about potential technological developments in the sector. So just a brief insurance introduction for BCIS Insurance Services. As I said, we've got a bit of a mixed crowd, so just wanted to cover, but most people I think will be familiar with our reinstatement calculator, which has been used extensively in the industry. But then we've also got the ABI BCIS House Rebuilding Cost Index, which we produce. And then today we're really, really excited to be able to get a chance to introduce you to our new service we're offering, which we see as a real game changer in ensuring commercial and residential customers are adequately covered. So just a little bit of housekeeping before we kick off here. So just to be clear, the webinar is being recorded and will be sent to everyone who's registered. So it will also be accessible through our website. So don't worry if you are having any technical problems. It does happen sometimes. You'll be able to watch it again soon. So the first bit I just wanted to cover was questions. So we do welcome any questions from attendees. So they're accessible via the little question mark icon on the taskbar. So we've got a number of questions to go through in the webinar, and we will answer as many as we can. So we currently got current count of just over 600 attendees on this call, and the last time we ran a carbon-based webinar, we received more than 200 questions. So we do see quite similar questions and themes coming up, so I will try to consolidate those, and we will answer as much as we can across the webinar attendees. So if today's webinar is useful, then we'd be really happy to run through some similar type webinars such as this again in a few months' time. So the next section down you'll see is the poll questions. So some poll questions will pop up on your screen during the webinar. They can be accessed anytime if you click on the graph icon again on the taskbar. The purpose of these questions really is just to help us understand the attendees' experience a bit better, what they're seeing in their own role and part of the industry. So these can also help us think about the future content that we're going to do. To allow the questions to be answered right up to the end of the webinar, we won't be publishing the answers during the session, but we will share the results when we share the recording with you. And if the question isn't relevant to you, please feel free just to ignore it and click away if it's not applicable. As I said, we've got a bit of a mix of industry, so yeah, it might not be relevant to everyone. And then the final bit before we just go on is our feedback survey. So following the webinar, you'll receive a short survey asking you for some feedback on the webinar. We just really ask if you could please spare a couple of minutes just to complete the survey. It really does help us plan future webinar and content. And to be honest, it helps us understand how we can help you going forward. There's also an option to ask any questions that if you didn't get the chance during this session, or if you think of later, you can also pop those in and we'll come back to you as soon as we can. Okay, great. So without further ado, just wanted to tee up our industry experts for today's session. So first of all, we have Cos Camacho. So he's the asset manager for insurance at BCIS. So good morning, Cos.
Morning, Rich. Morning, everyone.
Great. And we also then have with us Anthony Peake, who is the CEO of Intelligent AI. So good morning, Anthony.
Good morning, Richard, and good morning, everyone.
How are we, gents? Everyone okay?
Very good. Very good. Just
Excellent.
spent the last couple of days at Ermic talking to lots of property owners.
Yeah, we've seen a lot of the content, and I think it feels in line with probably what we're discussing quite a lot today as well, aren't we?
Yeah. Mm-hmm. Yeah, I'm good. We're good. We're good. Yeah.
Excellent. Okay, great. So we'll push on with our first question. So we thought it was quite important to kind of just start from the beginning, get the concept really clear. So really simple, what is underinsurance and why is it such a problem? So Anthony, if you'd like to kick off.
Yeah, so I mean, Cos will talk, I'm sure, in detail about material costs and everything else, but you know, we've seen a skyrocketing material costs last few years. A couple of most recent rises in labour have contributed significantly to underinsurance. Organisations, major surveyors, etc., like BCH, have found in Q1 this year, and they also published some data from Q2 last year, that between 66% and 69% of instructions, and that's each time about 12 billion of appraised properties. The average underinsurance has been around about 61%. And there's also been many examples of underinsurance of upwards of 250%. On average, with all of the big insurers I talk to, I spend a lot of time at Lloyd's London, most of those insurers are seeing underinsurance at the 50% plus range. So underinsurance is basically, have you declared the right value in order to have the right level of insurance? And when it comes to any form of disaster, are you adequately covered to recover your house, to recover your business, and to be able to continue trading?
Cos, anything to add on there at all?
No, there's not much to add, Anthony. You've covered everything. But just to go to what I went to the ABI website to try and understand what they understand or what they define underinsurance is. According to them, underinsurance occurs when the insurance cover or sum insured is less than the value at risk. So we're looking at the total value of everything you have, including all the structures and everything you have on. If it is in construction, it should be covered for the worst case scenario, that is for the total loss. So you're looking at the total cost at that point in time, and as Anthony has already alluded to it, it will affect how much the insurance company will pay you in the unfortunate event of a loss. Yeah.
Richard, just to add a point on that as well. I mean, one of the biggest challenges in underinsurance is that often people will have a portfolio of properties and they may get a quarter of that portfolio valued each year. And when we look back at 3 years and we were having fairly low and stable inflation, adding a couple of percent to the other 75% of the portfolio hadn't had value that year was fine. But when you've got years where plant, machinery, labour, costs have gone up 20%, you need to have accurate reinstatement costs every year. And also, probably pre-COVID, a lot of insurance policies were full cover. which actually meant if the client didn't quite declare the right value, they were still paid out fully. We've seen a huge move to averaging clauses, which basically means that if you haven't declared the right value, you invariably will be paid less.
So, and have either of you seen much about the, well, with regards to FOS, building insurance complaints rising as well? Have either of you seen much of this at all?
Yeah, there has been a huge increase. I think it's about 30% increase in complaints in the last year. The FOS actually publishes a number of use cases, a number of real examples, and invariably they are coming down on the side of the consumer, as the consumer not being the expert in the room. And so therefore, especially with the introduction of consumer duty legislation, which is pushing forward now, there is a clear onus on the insurance professionals to make sure they've done everything they can to reasonably work with the client to have appropriate coverage. But yes, there are a number of things under consumer duty and the Financial Ombudsman Service whereby more pressure is being put onto the insurer to cover it, to pay out. But equally, with changes in inflation, there is a pressure on the consumer, the property owner, to get valuations every year.
Thank you.
Yeah. Just wanted to add that the FOS has also increased the penalties they can charge on negligent advice. So it's something which advisors should take note of. It is close on to $500,000 that they can sort of impose on negligent advice. Yeah. Mm-hmm.
Lovely, thank you. Okay, so our next question is around, so customers are generally more aware of underinsurance risks, but some still won't adjust their cover. What do you feel we should be highlighting? And Anthony, I'll go to you first, if that's okay.
So I think it is the fact that there's been some articles in the Guardian from individual property owners, residential property owners, where literally they've not been able to recover from a disaster because they haven't been fully covered. So lots of people, especially in a tight economy, will try to not change their premiums or if possible reduce their premiums. More and more now, they will not be paid out adequately. And so, it's to increase those premiums for full cover is not a huge difference. But it's very important for people to be fully covered. From a business point of view, we're seeing more and more SMEs that are particularly being hit, where they're not able to recover their business and they go out of business. So the sort of averaging clauses are really beginning to hit organizations, and I know brokers, insurers, and everyone else are, while they're seeing 50% under insurance, they're not requesting 50% increases in premiums. So I think it's important to highlight underinsurance is a huge issue. Brokers are there, insurers are there, and chartered surveyors are there to get accurate pricing. But using your broker and using your insurer to make sure that you are fully covered, it doesn't have to be a huge hike in premiums.
And do you think it's just a habit situation, Anthony? Because I mean, obviously, I know if I'm looking at my car insurance, I'll always pick the cheapest option. Is that the issue? Do you think? Sometimes I think people don't take into account that property is probably one of the biggest investments they make in their life, especially in residential, and so they will just treat it blasé like a car or some other smaller asset. It is the biggest financial commitment you make in your life, and if anything happens, and insurance is invariably seen as something for a rainy day, and do I really need it? But more and more now. The value of that coverage is certainly saving people's major assets. Lovely, thank you.
Yeah, just to add a bit more to this, I think there are two things to put into the frame here. The first one is incorrect and inadequate assessments, which we talked about. When people are looking at their cover, they should look at all the structures they have. You've got to look at the garages. You've got to look at all the properties you have, as Anthony has said. Look at your whole portfolio, because when insurers are looking at this, in the event of a claim, they're looking at the value of that portfolio. We should not forget that insurance rebuilding statements costs are not the same as market value. There's a difference in that, and we've talked about choosing the lowest. It's not always advisable. But the second and most important thing is out-of-date assessments, right? This can result from not taking into consideration improvements such as extensions, which could increase the floor area of your property and therefore increase your cover. Improvements like solar panels, sustainability features, which you might have had, alterations you might have, and lastly, the most important thing, which Anthony also alluded to again, is inflation. Keeping up with inflation, making sure that your cover is reviewed regularly and you are up to date with inflation adjustments.
Excellent, thank you. So we're just going to take on to a bit more information for Anthony now. So yeah, over to you, Mr. P.
Yeah, I mean, picking up on your last point as well, what's taken into account, the quality of data, the accuracy of data, the descriptions of the height of the building, the descriptions of the number of stories in the building. With coming out with the new intelligent rebuild cost platform, we've also been doing a lot of comparison between old surveys and new digital surveys, etc. And we often find that the quality of the data is one of the key issues. Actually, the benefit, the higher quality data that a property owner can provide to their broker, who can provide to the insurer, gives everybody reassurance. It presents less risk, and actually, it invariably results in lower premiums. So, the investment in reinstatement costs, the investment in having chart surveyors look at your properties, etc., can actually be recouped in the premiums. But as an example of where people haven't looked at their portfolios properly over the last couple of years, and especially with sort of hyperinflation, we did one test through Lloyd's Lab with one insurer of 355 commercial properties. Those properties were between 1 and 20 million. The current reinstatement value as declared by the clients for those properties was just over 5 billion. The actual reinstatement value when properly recalculated was 6.17 billion. So it was only 1.17 billion underinsured. And for the insurer's point of view, that means they've missed out on about 2 million of premiums. And more now with the averaging clause, the payouts will be invariably lower because they haven't been declared correctly. So just on 355 properties, commercial properties, you can see how big those numbers could be. So just picking up on the new platform, the Intelligent Rebuild Cost Platform, Intelligent AI has been working very closely with BCIS over the last year in developing the Rebuild Cost Platform, the Intelligent Rebuild Cost Platform. One of the biggest challenges most people have is the speed of getting reinstatement valuations, the accuracy of the data, and the granularity of the data as well. And so we've spent a lot of time in working together to make sure that we can take an individual property, type in the address, fix the address, geolocate it, and then automatically be able to define what its occupancy is, what its height is, the area, etc. We've also spent a lot of time on looking at all of the modifiers, and we'll cover a little bit later because I think there was a question on AI, but we'll cover that a little bit later. But again, using AI to intelligently provide additional data, the number of floors in a building, the height of a building, all of that kind of stuff. So across the platform, The whole point of this is to be able to automate the production of the data required to do the. Do you just want to go back to that last one, Richard? Sorry.
Sorry.
Yeah. So yeah, everything from geolocating the property, providing a unique property reference number, a UPRN, actually mapping what is the occupancy of that. It's not just a warehouse. It's a warehouse used for mechanical engineering, or it's not just a pub. It's a pub with a restaurant. So the granularity of occupancy data. Then looking at all of the professional fees, the demolition costs, the locality. So for, in a property in central London is about 121% of the rest of the country. In Chelsea and Westminster, it's 131. In Newcastle, it's 93%. So even those sorts of indexes of costs. So the important thing for us in working with insurers, in working with brokers, and working with some of the leading chartered surveyors in the development of the platform has actually been around the challenges of the quality of data. And we're very happy now with the results, and that ability to either be able to put in a single property or to be able to put in large batches, hundreds of thousands of properties, and get reinstatement costs. Good thing about that now is it becomes cost effective to be able to do 100% of a portfolio rather than just a quarter of a portfolio. We're aiming very much at the desktop survey market. But the other good thing about this is the more that you do on the desktop surveying side, the more use cases you will see where it requires a physical survey. It's above a certain size, it's above a certain value, the complexity of a site with multiple properties, etc. So we also see this platform as actually helping chartered surveyors when they go to do physical surveys to pre-populate some of the data before they go. So this isn't going to replace chartered surveyors, but what it is going to mean is that people can get 100% of properties valued every year.
Excellent.
And as I said, I mean, the whole point of the platform then is to very quickly. We've taken a process that can often take an hour for people to pull data together, and we're able to generate a valuation in about 7 seconds. So I'm sure people will be very interested in getting in touch and getting some demos via BCIS for that. And then also the automation of the report, but it's also reinforced with Street View, with satellite, with maps and everything else. So, the fundamental thing is, have you got the right building and are you describing it correctly? And all of the data is provided to help reassure that.
Excellent. Lovely. Thank you very much. Okay, great. So next question is around property ratings. We actually had this quite a few times, but around the definitions for basic, good, and excellent. So, Cos, this is obviously your specialism here. So, what do these entail?
Right. So, in the calculator, in the rebuild calculator, we have we provide costs for 3 qualities: the basic, good, and excellent. So the basic is the bottom end of standard range of components and material which are available to contractors and developers. Those are the ones they can actually get the bottom end of stuff. The good is the top end of that standard range of materials, and therefore the contractors we expect they will have a slightly higher forms of finishing. And in excellent, we have got a higher standard of finishings and fittings and some specialist materials or purpose-built fittings like purpose-built kitchens. But one of the things we have to understand is when we say excellent, we are not saying that's the absolute extreme. I will illustrate that in a minute, but it is what we are trying to do is to capture that middle ground, the standard, and within the limits of the standard materials. So what are the assumptions we are making? For example, on the external walls, we are looking at the PC sum of the brick. So for our basic, we'll have currently the PC sum of our basic is 9,900 pounds per thousand, whereas our excellent is 1,350. And for period houses, like the Victorian houses, it can go up to 1,500 per thousand for the brick. So that is a distinguisher of on the external wall. That's just the material itself. The same applies to the roof, where we have got clay tiles, we have got concrete tiles, interlocking concrete tiles, different costs per square meter for those. The material, especially for windows and doors and stairs to some extent, but if we stay with windows and doors, we have the basic having stuff like UPVC type of windows, going all the way to aluminum and hardwood windows to the excellent. So there's a whole spread in between. We talked about the kitchens and sanitary fittings before, and we also have the fire surrounds, different fire surrounds for ranging from just your timber softwood to your limestone and marble fireplaces. We also look at the designs. There are various types of designs. We talked about the roof. Before you go there, before you leave that on, Rich, we look at the designs. If you look at the roof, for example, you can have a shallow pitch, a flat roof, or in concrete roof tiles, you can go as low as 22.5 degrees. But for high quality houses, they're usually high pitched up to 45 degrees with clay tiles. There will be other things we've added on to the facades. They might have bay windows and all the other things that might look like, that might improve the curb appeal of the building depending on quality. And there might be also quantity issues where you have an increase in quantity due to quality. For example, if you have electric fittings, you might have more electric fittings in high quality buildings as opposed to low quality buildings, well, within the regulations. And we can add bathroom in suites also we have also bathroom in suites in high quality buildings. So that's how we determine quality. Yeah. Trish? Things to watch out for when you're looking at the quality is obviously things like non-traditional designs for buildings that might not be picked up by the quality, but it might affect your cost. So you want to look at these things. Non-conventional materials, we're assuming that brick and tiles are conventional, but when you've got stoneworks, we do have advice for this, but even in stone, we have grading in stone as well. And we've got also modern methods of construction. You should take note of that. Unusual features, which might not necessarily be picked by the quality, which include timber paneling, which can be found in period houses, ornate brickwork, and plasterboard, different types of plasterboard. We have got, you will find that there's a lot of lime in the old buildings as opposed to plasterboard. However, we are not covering high net worth properties, the super luxury properties. We are not covering those. Those are outside the remit of these. For those, you need to use approximate quantities approach and get specialists to look at. So we are looking at the more standard type of constructions. Thanks, Rich.
And Carl, so just on the final point, I mean, at what point do we define that? Where's the gap?
So it's the gap in what's the limit of
Yeah, so how do we define that? Obviously, I think it would probably be helpful.
That's if you have an architecturally designed building where you have had all those sort of architectural features on your building, you definitely need to look at getting specialist advice. But one of the things you see also in our calculators is that there is a limit to the sizes. There's a range of the sizes of the buildings. Our calculator will tell you usually some of these high net worth and super luxury buildings tend to be much larger than we cover. So you have to look at that. Our calculators will tell you that these are outside our remit. But again, as Anthony has said, we are not trying to replace the surveyor professional judgment is always advisable. The surveyor has to go on site and make these judgments and decide that this is covered by that. We also have specification. If you look in our calculator, you click on our calculator, you will have the specification details and the costs we have allowed for. So you will find how much we have allowed for on all these things. So again, as a professional, you have to use your judgment on these things.
Excellent, thank you, Cos. Which I think brings us on quite nicely to the next question, which was, so if you wouldn't mind explaining just a little bit more about what goes into the rebuild calculator in terms of the data. I believe it's probably bigger than the rest of all of the libraries combined, I understand. So it probably help to explain how we actually formulate these.
Okay, I mean, for the rebuild, what I've done is just to look at the rebuild calculator and the non-residential and just compare the two and see what's there. But for residential, we've got a rebuild cost which is based on cost models. For these cost models, they are quantity-based, approximate quantity-based models. So we've taken out archetypes of buildings and built up archetype quantity-based models. And we've got about 1,100 dwelling archetypes, and we're still counting. We're adding, hoping to add a few more in the next publication, and we are always gap filling. And another 650 ancillary models. These include things like garages, additional kitchens, garden offices, conservatories, etc. All that filling in. So these approximate quantities are priced using current input costs. This is supply prices of bricks, as we said earlier on, tiles, etc. The labor costs, specialist costs, and we collect approximately 12,500 costs. The quick look in our database, we have approximately 600,000 data points. Just over 600,000 data points for costs. When we add up all the models we have, when we add up all the supply prices, which are then rolled up into items, into composite items, and then the composite items then price our models. So we've got about 600,000. That's quite a massive database to maintain. But after we've done all that, the costs are then adjusted for market conditions. We add profit and overheads. We assess profit and overheads. Of course, we add prelims as well. And we are always looking at local adjustment factors. If you go into our calculator, it will look into all that. The one thing to remember is the costs, they reflect the current design practices. So even if we are actually pricing a Victorian house, we are looking at how it will be built using modern materials in the current with current design practices. But we allow for the period features for those dwellings. Therefore, the fireplaces you'll find in a Victorian house will be very different from the fireplaces you find in the interwar houses, for example. So after we've done that, we include demolition costs and supporting adjacent structures. So if it is an attached building, whenever you're going to carry out any of these rebuild costs, you have to support adjacent buildings. And we include also design fees. The one thing to note about rebuild costs is they are responsive to changes in statutory regulations, in building regulations, because we are saying that for you to rebuild this house, you have to comply with current regulations. On the other hand, non-residential buildings, they are based on average prices, which are analyzed, accepted tenders we receive from the industry. They're mainly from BCIS subscribers who send us real life projects. So they represent the average cost of building facilities, similar facilities. If you're looking at offices, what is the average cost of building a representative office. Again, the costs represent current designs and modern methodologies and methods of construction. So if you've got historic buildings and using our average prices, please note that there is not much there in historic data. But one distinction, again, is there is a lag in reflecting the effect of regulatory changes. So changes in building regulations are not picked up by in average prices immediately, because the buildings which are being constructed now would have gone through planning a few years back and will have had that planning. But for residential, we are looking at what happens immediately when there's a change or when the statutory regulations change. So to illustrate this, Rich, I've taken an example of a building where we've got both the rebuild and new build. I've taken new build average prices for flats, and I've taken a sample of recently built or recently received projects. These are been received in the past few years. Now you can see the top statistical analysis of those is that there is a spread from just over £900 there to over £3,600 per square meter. That is the maximum of that sample. It doesn't mean that is the absolute end. And you'll see that when we look at the rebuild, when we take a statistical sample of the rebuild modern build, the minimum is, the range is now from 1,300 as opposed to 900 in the new build, and is much lower. Again, the maximum is much lower than the new build, which is 3,600 there. But for me to illustrate this in a better way, let's look at this in a distribution diagram to show the difference between the two. So when you look at your average prices, they follow the normal distribution curve with a right skew, which simply means that there is a sort of a tail, a right tail on the end there, and you can build or you can add anything to your building. You can put gold taps and everything else. You go to the right there. So there is that sort of narrowing in the center, which means that there is a much higher distribution, or the much higher, many more buildings which are around the £1,500 per square meter. When you look at the rebuild, you see that they are more squashed together. They are more in the center. They are more in the center. There are not many peaks. We're not looking at many peaks. And the distribution is, again, much more narrower. I will show that with an illustration when we overlap the two. When we overlap the two, when we take the rebuild distribution and put on top of the new build, Rich? Yep, when you overlap that, you will... I can see that. You can see the distribution. So the new build flats, they will start from £900, but the absolute limit for the rebuild is around £1,400, £1,300 there. The new build flats, as shown by average prices, they can go on and on. In fact, we have cost of over £500 per square meter in our database. But the rebuild, there is a limit, or there is a final cost there of around £3,000 per square meter. So that's the difference in that. There are other differences in that the rebuild includes, as we said, the demolition costs, etc., and fees, whereas the new build costs do not include. So if you are using new build costs, you have to allow for your fees, you have to allow for demolition costs, whereas the rebuild costs have already been adjusted for those things. Hopefully that's helpful.
Excellent. Thank you, Cos. Yeah, on that topic, almost like we prepared this, but so what is happening with building costs? So do we think we're going to have another period of high inflation?
Well, building costs, we've been, just like the industry, we've been undergoing through swings of highs and lows, as Anthony has alluded to earlier on, especially since 2020. Input costs in particular have been going up and down as a result of disruptions in supply chains, in the supply chain disruptions after the COVID pandemic, and also issues in the Middle East, issues in Eastern Europe, high energy prices, as well as a result of disruptions in Europe, and labor shortages. We can argue what caused labor shortages, but there's been labor shortages after pandemic. Some people didn't go back to the industry, and we've lost our other supply of labor through our political arrangements with Europe. So I'll take an example there of what has happened. You can see structural steel, for example, has gone up and down, and at one particular point, it went up by close on to 80% year-on-year increase in price at one point, 80%, almost doubling the price. It has come down. That's the blue line. You can see the top blue line there. It has come down a bit, and it has now come down again to almost deflating and negative increases. If we look at the red line in there, that's softwood, we again had a peak of close on to 40% at one point. That is around October 21. That was because of disruptions in sawmills, etc., and all what was happening in Eastern Europe. So that's what has happened. But you can see that at the tail end now there is a bit of stability. Availability of material has improved, and prices have stabilized. So to answer what is happening, what is going to happen in the future, Rich, I want to go back and look at what has been happening in the long-term trends. Let's flip on to the next one. So if we concentrate, it's a little bit busy, this graph, but if we concentrate on the blue line represents the year-on-year change in the house rebuilding cost index over the past few years. Now you can see that it has been following the economic cycles, starting from the stagflation in the 80s, where we had inflation of up to 22% year on year, and through the financial crashes in 89, into the global financial crash again in 2009. So it has been reasonably steady and following the economic cycle throughout this period. So this is showing generally that the inflation in the rebuild has been pushed by demand. It has been demand push following the economic cycle. But what has happened lately after 2020, we had the COVID pandemic, and there were disruptions in the supply side of things, that is the supply of material, supply of labor. So that is what has resulted in the inflation we have seen in the past few years, where the peak, they're almost similar to the stagflation peak of just under 20%. But the one thing to note about this is that that inflation was actually exacerbated by changes in building regulations. So I've sort of highlighted where there's been changes in building regulations throughout the period, but the changes in building regulations in 22 added on to the inflation. So why am I saying all this? Going forward, things seem to have stabilized because there's sluggish growth in the economy, but we are expecting another change in building regulations coming into 2025. This change is the move towards the future homes and future standards, future home standards. And we're expecting there will be a small peak. We don't know how much, but there might be a peak in another spike in building costs. We're not expecting it to go as high as the 2022 one, but we're expecting there to be another adjustment to the costs. I've also superimposed the inflation, general inflation, as measured by CPI, just to illustrate that relying on CPI alone will mean that you will be underinsured. Adjusting your insurance using CPI, you can see that it is generally lower than rebuild insurance. And there is a lag in it picking up inflation, which is experienced by in rebuild. We don't really. I would say that we are going to have changes in the supply. Are we going to have changes in the demand-led changes? I don't think so, because we are going to have the economy is generally slowing down, and we are going to experience low inflation generally in that. So demand is going to be very low. So we are not going to have that. So it is going to be the regulatory change which is likely to happen to push up inflation. However, there might be other things which might actually affect our supply side. We don't really know what is going to happen in the Middle East. Are they going to? Is there going to be escalations in the Middle East, or the war in Europe? Is it going to affect the supply side again? So it is important that we keep an open eye, and please use the right indices all the time to adjust your insurance. A lot of rumbling.
Perfect. Cos, do you see the elections coming up in the UK and in the US are going to have any material change? What should I be betting on?
So people won't ask that. I think no one would really know what is going to happen. But the one thing which is really obvious, or what we know, is there's very little headroom in public finances, in the public purse in the UK. So whatever government comes into power, they are going to be restricted to what they can spend. Although we know that Labour is promising to have all these sustainable developments, and that could increase or boost the economy a bit. But generally, there is not much difference between the policies of the two parties. The US, again, the US economy, it's more like the US economy. There's not much that the governments will do that will change the economy. It's going to be the relationship between the East and the West in the US economy. But I don't think there is going to be much change in what they can do. The only other thing I could say is the US interest rates in the US are high, and the US economy is still firing on all cylinders. That is going to impact what the Bank of England here might do, because lowering the interest too early or too quickly might have an impact on the pound, and therefore it might actually bring up inflation. So, if I knew the answer to that, I wouldn't be sitting here.
You're hedging your bets.
But again, yes, there is. I think there is a bit on labor, more expenditure we might expect. But they're all talking about all this fiscal responsibility, but we don't know what is going to happen when they actually get into power. Mm-hmm.
Thank you. Just want to slightly apologise. We're already 5 minutes over at the moment, so hopefully we'll try and wrap up for 12. I'm doing a terrible job of my Julie Etchingham today, so we'll try. So it's just going to jump on to our next question. So luckily we've actually had a lot of people asking this on the call already. We've had about 6 or 7 times this has been asked. But should VAT be included in reinstatement cost assessments?
Well, the short answer is all goods and services I've got normally standard rated, but there are exceptions to that, which include new build qualifying dwellings, communal dwellings, residential dwellings, and certain building types. And there are other exceptions in that. So one thing, the only way to find out, the best way to find out is to go to the HMRC website. They've got guidance there on building costs on VAT, and it will explain, it will give you good guidance. The RICS provide guidance as well. They say that you should consider each case individually. Take into account the building and trading position of your client. So again, we've said, for example, if it's a new build house, VAT is not normally included. When it comes to the other commercial and non-residential buildings, there is usually a standard VAT on that, but most of the assessments will not include VAT. The most important thing to do and to say is say exactly what you have done, so that the insurers know that you have excluded or included the VAT. Consult your broker; they will tell you exactly where they are, and even your clients within the very similar portfolio, they might choose to have VAT on other buildings or not. It's a complicated answer to say. On dwellings, no. Design fees and other works which are not connected with the construction include VAT, but on other dwellings, on other buildings, usually VAT is standard rated, but for the assessments, you have to treat it on an individual basis. Anthony, over to you.
No, I was just going to say, within the platform, we've modelled the rules, but we also provide all of the data, Inc. VAT and ex VAT, because, as you rightly say, because some insurers want to know, have you included VAT, haven't you included VAT, and in which you've done that. So we make that transparent within the platform.
Excellent. Okay, so we are nearly there with the questions all. We'll give Cos a quick break, I think, and let him have his tea. Yeah, Anthony, I think probably best for you to start on this is around what opportunities do AI automation present in the industry. So it's like I said earlier, you know, we're well aware of, you know, how much things are still run on spreadsheets in certain areas. Yeah, over to yourself.
Yeah, I think the first thing is for people to not be concerned about AI, certainly within the Intelligent Rebuild Cost platform. We use AI to generate the data sets. We use AI, once we've generated those data sets, we validate all of that data with chartered surveyors, with brokers, with BCIS, etc. So, you know, we're deriving new forms of data, but we're used to people claiming that they have good data and then not having it. So we look to try and have sort of 3 sources of every piece of data. And that's where sometimes AI comes in very well, because there's governmental data, there's commercial proprietary data. We've developed a number of algorithms ourselves to generate data where that data is essential for reinstatement costs, but there isn't a good quality source for it. But if you know, we've been working on a big project with the European Space Agency to analyze buildings from space. And again, when you're looking at you know, satellite images of a kilometre strip of every property in that kilometre, what you don't want to be doing is manually looking at that. So we'll apply AI to look at satellite images in order to be able to, and these are sort of art of the possible of the future, to be able to not only pick up the footprint of the building, the height of the building, the height of the building above sea level, the height to the eaves, the height to the peak, the height to the chimney, and all of these variations, but also potentially counting the number of windows going up the building. Similarly, we'd apply AI to Street View in order to analyze what the materials of the building are and what the windows are, etc. So, but we're not reliant on those. This is where we talk about trying to get 3 sources of every piece of data to have an algorithmic confidence. So we've been able to derive very good sources of data. But more and more AI is being used in analyzing large volumes of data. So, in the near future, I'm looking forward to taking a whole load of residential sales data and then being able to analyze millions of properties and derive what every brochure wrote about the number of bathrooms in a house, and that kind of thing. So AI is helping to augment the role. It's not replacing the role. But the whole point of the Intelligent Rebuild Cost platform that we've developed and going to market with BCIS is in order to be able to augment the roles for people to be able to do 100% of properties being valued each year, not just a quarter of them, for significantly less expense, but also to provide the high quality of data. So whether it's and one of the things we're looking to do over the next year is also then to be able to bring in planning drawings and to be, if anyone's ever looked, and then most of your audience will have looked at the planning portals when trying to work out the layout and the compartmentation of a property and what the internals are made of, etc. It's a basket case of there can be many documents mislabeled and there's a range of documents. So to be able to analyze all of that type of data, to be able to pull out the floor plans of properties, to be able to analyze and measure the floor plans and use that as another source of data. So to us, AI is augmenting the role. I can also see roles in the future where it gives a human face to data. So when you're using large language models and ChatGPT and this kind of stuff, being able to give it 100 rebuild cost reports for your portfolio and go, which is my most expensive, which ones are made of wood, which ones are thatched, and actually being able to talk to documents and to be able to pull out information in a very human way. That's certainly, a lot of brokers are looking at that, a lot of insurers are looking at that. And property owners as well, as ways of being able to generate the data.
That's great, thank you. And then we are on to our final at last. So we've also been asked this quite a few times during the session as well. Not to put a shameless plug, but we've also got our carbon webinar that's available on the website as well. So, but this is all around greener building materials and the impact on reinstatement valuations. Any thoughts on that at all, gents?
Again, from my side, one of the things that we are beginning to look at is also how we can apply the same sorts of data to calculate the carbon footprint of buildings. I know there's a huge amount of work that's being done by BCIS on that front with all of the data, but it is an area where insurers are asking us, brokers are asking us, property owners and chartered surveyors are asking us. So we have a range of additional data on ESG, environmental social governance, and understanding the impact of natural catastrophe, or NatCat, as the insurers tend to call it, and the impact of flood. Being able to understand listed buildings and the materials in them, and etc. So more and more I can see the sort of intersection between the reinstatement value and the risks around the building, and the impact of climate change on those buildings will start to be calculated in the reinstatement cost.
Just a quick note on that. I mean, if most of the green agenda is obviously being driven from the top, from the government, and if there's any regulatory change, we will pick that up, and it is likely to increase the rebuild cost at the beginning, because any introduction of new technology is going to result in a slightly higher costs, because the industry is still finding its feet. But after some time, it will come down. When double glazing was introduced, it was very expensive, but it then calmed down. So yes, BCIS is currently already providing advice and adjustment factors on sustainable technologies like solar panels and air source heat pumps, etc. But other materials, other greener materials, will inevitably increase costs, but it might actually have other impacts of reducing the running cost of the building, which might be desirable for A, letting, and B, the value of the building itself.
No, that's really helpful, because yeah, we did cover on a previous webinar on that exact topic, actually, which you know, we've got to consider the operational carbon, not just the embodied carbon and the materials as well. So it's yeah, really important point. Lovely. Okay, so I did promise we were going to finish for 12, and I've also failed miserably on that. So thank you all for bearing with us. So we've had a lot of questions through the session. So if you joined lately, just to quickly catch up before we wrap up. So first of all, we will be sharing the recording of this, so with everyone who's attending and booked as well. Also, any questions that you've asked through the session, we will respond to and we'll circulate with that. And also, if there's any more questions that pop up in your head over the next couple of weeks, you know, feel free to reach out to us. With regards to, we've also had about 20 questions regarding the platform itself. So yeah, if you go on to bcis.co.uk, you can request a demonstration, and we'll get in touch to talk you through the system. We're nearly live on that, so you know, very exciting time. But thank you all for first of all the panel for the support today, and your expert opinion, and thank you all for joining.
Thank you, Richard. Thank you, everyone.
Thank you, Richard. Thank you all. Okay.